Good afternoon, traders. Yesterday, I released a video called The Stock Market Doesn't Care About Your Math. Well, today, it showed me it doesn't care about my patterns either. Earlier, I took a trade on SKLZ right at the open of the pre-market, and it developed a really nice textbook ABCD pattern. This is the high of the previous session, this yellow dotted dashed line, and you can see that the price broke out through that level. So the beginning of that move is point A, the new high is B, and then C is established once the pullback is over. And then my plan says that as soon as a 1 minute candle makes a new high, I have to take an entry. Well, usually that happens right away after point C, usually on the next candle. Well, you can see what happened here is it just kind of went sideways into consolidation. So that was a little bit unusual, but I still have to take the entry as soon as a 1 minute candle makes a new high, which it did back here. I got filled at 1754. This is where things changed because normally my stop loss would be the low of the previous candle. But you can see that if you look up here, when I hover over this candle, the low was 1750. So that means, and my stop loss would be 1749. So that means my risk is 5 cents and my profit target would be 10 cents higher than the entry. If this was a dollar stock, that would be a reasonable trade because you're talking about losing 5% to gain 10%. But here, 10% would be 18 cents, or sorry, it would be $1.80 on this stock. 18 cents is only 1%. We're talking about 10 cents. And so this just it didn't make any sense to me to use that as my stop loss. So what I decided to do was to make it the low of the consolidation area. And the low of this candle, if you look up here again, 1742. So that's what this line is marking out. And my stop loss is 1 cent lower than that, 1741. So the difference between my entry and the stop loss is 13 cents. So my 2R target is 26 cents. We're still talking about just a little bit better than 1% on the reward there. So it's still a very low risk trade and fairly low reward trade, but at least it's kind of worth taking at that point. And also it was worth taking to test out this pattern here because I haven't really seen this happen in all the months that I've been trading this pre-market plan. Of course, I've seen patterns go into consolidation. That happens a lot. But usually at 4 a.m., when an ABCD pattern starts like this, it does one of two things. It either, after the pullback, shoots up to a new high, or it just fakes you out and then continues down lower and stops you out. But this sideways move was really the first time I've seen this, and I've been trading this plan now probably near 200 trades. So it's pretty unusual, and I needed to be ready for the next time this happens. So I'm calling this a hybrid ABCD pattern, really ABC into consolidation. Instead of heading directly to point B, the price action consolidates after point C. And I'm instructing myself, in my plan to use the high and low of the consolidation as your risk, right? So the high being my entry, really, in this case. So that's it. So hopefully this was helpful to you and show you that, even these patterns, when they kind of set up like a textbook like this one did, that they don't always have to continue that way and strange things can happen. Doesn't mean you shouldn't take the trade. This still worked out really well. And in fact, it went way higher than my profit target, but that is a really uncertain thing. That happens about 1 out of 20 this month, about 1 out of 30 times where these things continue much higher than the 2R target. So don't look at this and think that, okay, you should be scaling out because I tried that for many months and it doesn't work. All right, so let me know if you have any questions or comments about this. Hopefully this was helpful to you. As always take your stop losses no matter what. Honor your profit targets, and in the long run, you should be green. Take care.